Alright guys, I'm gonna do a video on a couple different things. How to use the VWAP and EMAs to your advantage. Had a couple people asking about this, and it's kind of simple. And also, I wanted to showcase this new TC2000. I'm loving this, guys. If anybody is looking for a great, actually, I'll do a whole video on just TC2000. How about that? This is going to be talking about how to use the VWAP, and then I'll talk about trades we did. So this will kind of be like a trade recap. I'll post this in the trade recap tab and in the video library, because this is also going to be a trade recap and then show how I use the VWAP with those trades. So Friday was an awesome day. Some really great trades were called out. Let me go to the trade alert tab and scroll up. That way I can see what trades. But we absolutely killed it, of course. Again, this is obviously y'all can see this is beginning to be a routine. We have just been demolishing, this market and this volatility. So first things first is I'm just going to go down the list on all the trades that triggered, win or lose. I'm going to go through every single one today, win or lose. Starbucks. This was called out at 64.85, stop loss $64. All right. So it's called out about a little up here, 64.85. You got a good little run. 64.85 was right here, right? It went to a high of almost 60. You almost got a point. So usually what I say is, if you get a point, you should at least be taking off something. At least if you get a point, even 50 cents or a point, at least take off something to where if the trade comes back against you and you get stopped out on the remainder, it's a break-even trade. So look at it like this. All right, so let's say it like this. If you bought, let's say you took it at 64.85 and you gave yourself $1 stop, right? And let's say you took 100 shares. You only wanted to lose $100, right? And your stop's $1 away, obviously. Well, if you at least, well, it doesn't matter. Basically, it doesn't matter. I guess it doesn't matter how many shares you have or where your stop's at. All I'm saying is let's say if you take if you got 1,000 shares or something or whatever it is, and you have $1 stop. Well, if you're up $1, at least take off. Why can't you at least take off half, right? You take off half, pay yourself for that half. Because think about it. If you make if the stock goes up $1 and your stop's $1, well, if you make $1 on half, right? And then you have your stop loss is $1 and you lose $1 on the other half, well, what happens? The trade is break even. So just look at it. It doesn't matter how many shares you have. If you buy 100 shares and it goes up $1, and you sell half at $1, right? You make half on 50 shares, and then your stop loss is $1 on the other 50, and then you lose $1 on 50 shares. So you come out break even, right? So that's always good to do. Always pay yourself something. I know sometimes you're looking for a bigger move, and that's perfectly fine. We teach y'all that. We teach y'all to try to stay in these moves longer, and that's a good thing. You want to try to maximize your gains as much as you can, right? So, this stock, in my opinion, you should have either made money or worst case, I think you should have made money, because in my opinion, if I get $1, most likely I'm going to take, it's hard to say. It depends. If you did, I think you should have at least broke even. And if you broke even, I think that's perfectly fine, because we do teach y'all to try to hold for larger gains. But I would say on this trade, you should have made money only due to the fact that look how far up you bought it. We didn't alert it to right here, so it was already extended, right? So now if you bought it down here and you only win $1, it's perfectly fine thinking that you could obviously get a lot more. But when you buy something up here, it obvious, I didn't call this trade out. Maybe it was breaking over some strong resistance rock saw. But what I'm saying is it was already up so much on the day, you shouldn't be thinking, okay, I can get another 4 points out of this, right? So, in my opinion, you should have made money. I mean, if I was buying something this high and overextended, $1 would be great. So, that's how I would have played that trade. So, and I'll get to the VWAP in a second. I'm going to look for some better examples, and if I don't see any good ones, I'll tell you. So then came in Apple. This was definitely a losing trade, I would say. I mean, he called it out at 213. You made 60 cents. I would probably say that you could have made a little money depending on if you scalped, but you could. I don't know if you could classify this as a total losing trade because you did get 50 cents. But obviously it didn't go up far from entry, so you can't necessarily classify this as a big winner or anything like that. I guess this would just kind of be one of those trades where, it made 50 cents. Most people probably stopped out. Some people maybe who were scalping made money. So I wouldn't say either or. But here's a good example of how I would like to use the VWAP. See, a VWAP is volume weighted average price. And the way it works is, theoretically, anytime the stock is above the VWAP, alright, so it tracks volume, right? So the way it works is if the stock is above the VWAP, basically the VWAP it tracks the price of where people bought it at and the volume. So basically it's saying that at this given point in time, wherever it's at that time, this is where the majority of the people who bought the stock today bought it at. So basically it's saying that the majority of the people are in at 208, 209, right? So if the stock is above the VWAP, a lot of people are in profit, and that's kind of looking at as a bullish trade. If the stock is under the VWAP, a lot of people are underwater. Like when it went across VWAP here, right? All these people who bought up here were underwater. So once again, if that's kind of confusing, this tracks price and volume. It's tracking all this volume that's being bought, all these shares. It's giving an average price, volume weighted average price, right? It's the average price in which all the volume was traded that day, right? It's just what it says. Average price and it's volume weighted of the volume traded today. So wherever the VWAP's at that given time, that is where the average volume has been traded. That's the average price. If you took like at let's just say at right here, why does it not show the time? What time? 10:18. It shows it right here up in this little box. I can't do it, but look up at the top of that box right there when it pops up. So let's say right here at 11:42. 10:42 a.m. Right? I'm gonna have to change the time because I'm central. But 10:39 a.m. At 10:39 a.m., all this volume that went through, right, for the day, however much volume it was at that given time, that if you added it all up, the average price that it was bought at or sold was right here, right? So that way, the way you can use it is if the stock's above it, you know that the majority of people are green on the trade, and then once it goes under, you know that the majority of the people are red on the trade, right? So it gives you an idea of kind of where the volume's at, and it basically I use it for for bullish and bearish. If it's above the VWAP, that's bullish to me. If it's below, that's bearish. And that's not necessarily a tell-all type of thing. You know, there's exceptions to that as well when you catch reversals off the top and stuff. But that's just general rule of thumb. And I'll say that in a vague, keep it vague, because there's always going to be times where I'll be bearish on something that's over the VWAP. But general rule of thumb, if it's under, bearish, above, bullish. And the way I use it is for support. A lot of times you'll see stocks pull back right to that VWAP and bounce off. All right. And anytime a stock is above the VWAP and it's pulling back, I want to see it hold that VWAP. You know, that is the line in the sand for me. If it, for instance, Apple, when Apple broke this VWAP here, that's whenever I started looking at it. I didn't end up taking a trade, but that's when I started looking at the trade and saying, okay, this is definitely, you know, a bearish stock. It's coming down. We're probably going to touch down here at the lower pre-market because it comes down and it breaks VWAP. I would have wanted to see it consolidate and hold VWAP and then bounce, right? You know, so you'll see that a lot of times. And a lot of times stocks will come down, they'll sell off, and they'll bounce up and bounce right into that VWAP and then sell back off. And you can look to take things short right at the VWAP as it rejects the VWAP. So I use it as a support and resistance. Anytime something's under the VWAP and it bounces up to the VWAP and I'm bearish on it, I want to see it reject that VWAP. And I can either look to take a trade off of that, or if I'm bullish, I want to see things hold it and bounce and hold the VWAP. Same thing with reversals. If something's under the VWAP and it's starting to reverse, once it gets up over that VWAP, that's when I start looking at it and say, okay, it's now over the VWAP. Now we can look to take it, maybe take it long. So that's just how I use it. But let's go on to some more trades. Let's see, where is the next? Stop. Hold on. All right, so wait a second. I'm looking at trades that triggered. The last trade didn't trigger, so nope, that didn't trigger either. Nope, didn't trigger. I think this one triggered. Yeah. So I called this out in chat. Alerted. SPY under 274. Great trade. I mean, it had pre-market support right here, right? So if you look, I love this new charting platform. But I like TOS better, exactly, like just because I'm used to it. But I like this one for certain reasons. So you notice it had strong. I don't know why it jumps to certain stuff. Well, I wanted to let me put it where I want to put it. I don't know. So it had strong, like it jumps. That's weird. Like, why can't I put it where I want to put it? All right, so anyways, it had strong support at 274. Well, notice it came down, it kind of broke it, and it consolidated right there. Well, when I saw that, that's when I called it short, right under that 274, right when it was consolidating. And, I mean, you got a smoking trade all the way down. I mean, heck of a trade, you know. That was a very good trade. And notice how it never really got above VWAP, right? It kind of came up, got above VWAP, and instantly, once I saw it instantly come under VWAP, and then it broke this 200 SMA, I knew it was probably gonna go down from there. Not to mention all the other stocks that we look at were going down. So then QQQs were called out under 170.50, which was right around here, right at this consolidation, right? Look at that. You see that consolidation, guys? This is what you need to look for. You know, when you see a stock is coming down obviously you don't want to just take it without a setup, you know? Sure, when it broke VWAP, I was bearish on this trade, right? And I was looking to get short or looking to call it out or something, you know? But I'm not going to call a trade out as it's just coming straight down unless it has some, you know, a clear line of support, which was right here at 171, right? So once we saw it break 171, it instantly broke and started making this consolidation. We said, okay, now it's setting up for a good setup. Now we can take it under this bear flag, right? This is what you call a bear flag, guys. Bear flag consolidation. You know, oh no, that ain't it. Bear flag consolidation, or a, you know, some people call it a pennant. You know, you can call it a pennant, descending triangle, whatever you want to call it. But that was that trade. Once it broke 170.50, it was off. It had a clear line of support to break. And what did I say? When something breaks support, it breaks through with force. So, great trade. And then you could have just rode it all the way down, you know. Put in this nice support here. It kind of bounced. And you could even, if you wanted, took it short again for a nice little move down. Then you have, let's see, Netflix. Let's see if this was, okay, so this was called out right under here at 314, right there. Now notice the reason this trade was called out. Notice this. Don't you notice this big line of support it has? Right? See that big line of support it was bouncing off of? We took it, called it short under that. Right? At 314. Wait. It was called at 314. So right around here. You know, but right under these lows, you know, it had this big support right here at 314, right there. And once it broke these lows, you know, it bounced off it 1, 2, 3, 4, 5, 6 times. Once it broke through with force, right? And notice how it came back up straight to the VWAP, right? You'll see this all the time. Stuff will come straight back into the VWAP. And bam, you can look to take it short again right there and let it fade down. So, Baidu, this was a trade I called out under 198.50. There it is, 198.50. Awesome trade. Wait, 98. Oh, okay, never mind. All right, so it was called right on. See what I was looking at is it had strong support right here. It had support, all right. It had support right here, resistance right there from the other day. So this was a strong line of support right here for it, right? So that's where I called it out at, right under 198.50. Well, a little under this, right there. Actually, I wanted to take it short under this low. That's where I wanted to call it. That's where I took it at. But I didn't have time to get it in the chat, and I didn't want people to think that they were chasing because I knew it was still a good trade. Because we teach y'all sometimes don't chase it. So I knew if I would have put it under 199 and y'all didn't, once y'all saw it, it was already at 190.50, y'all might have thought it was chasing. But there's exceptions to everything. You know, you're right. You don't want to trade. But I knew once it broke this, it had room all the way down to here. I knew it had room all the way down to this level right here. And look where it touched it to a T. You know, this is where I was saying it was probably going to come. Why does it do that? I don't like that box. I was saying it was probably going to come down to right here. And it did. It came all the way down. So that's why I put 198.50 in the chat. And literally, when it broke 198.50 right here, when it broke right there at 198.50, by the time it got here, 3 candles later, it was already up 100% almost. It went from like 60 cents right here to like $1 or something like that. You know, $1.10. It went from like 50 cent right here to like $1.10 here, like up more than 100%. Ended up going 500% down here to $3 from 50 cents. But you can see why I took that trade and why I called it out. Look at the strong line of support. Once it breaks this, where does it have? Sure, it has a little support right here, but not much. And as you can see, it did consolidate right there. But I knew once it broke that, it was probably going to come down here and test this down here. And that's exactly what it did. So, next one, Amazon. Amazon was called out under right here. Wasn't a huge trade, but 1665. And I'm sure that you made at least, you know, the options. If you played something, Friday's expiration, a little far out the money, I'm sure you easily made 50 to 100% on those options, because that's a big move in Amazon. I mean, think about it, guys. That is a 1665. It's a 10-point move. I can promise you, if you could find, you guarantee they had, it was, since it was Friday, I know if you played something like the 1600 or the 1550 puts, you probably could have gotten them for like $1 or something, and they probably instantly hit $2. You know, 100% easy. So, I think there was a couple more trades like reversals and stuff, but I think that's enough. You know, that's all that I see right now. I think there was a few more called out on Mike, but man, there was just some great trades. Look, but notice how as soon as it went under the VWAP, right, it cracked. You'll always hear me saying when stuff is consolidated, if I'm looking for something to break down, it's above the VWAP. You'll always hear me say, okay, it's hanging on the VWAP, and I'll call that trade out and say, once it breaks VWAP, you can get in short. You know, you'll hear me say that all the time. So look for that. Look for stuff to start holding VWAP, and once you see it consolidating on that VWAP, you can take it on the break of that. Not always, but a lot of times. And notice how they come up to VWAP and it bounces, right? VWAP is used as support and resistance for me. You know, and to get an idea of how many people are underwater and how many people are in the profit. So it gives you an idea if it's a bullish or bearish trade. But all right, guys, that's it. I'm going to go ahead and post this in the video recap and in the video library for how I use the VWAP. Y'all have a good day.